like this. Like I was like, yo, you can't even get past 10 pips, much less 20 pips. Like, why do you think it's gonna get all the way down there? That's announced that you can trust is gonna be yours. So just keep that in mind also. Um, and pretty much like what I'm the main thing I'm explaining on Confluence 2.5 is gonna be based off of like my move that I caught on USD JPY. What was it like? Almost a week and a half ago. Almost a week and a half ago, I think. Almost a week and a half ago. Or was it last week? I think it was last week. Yeah, California. It was last week. And overall, like I caught probably 200, 300, 300 plus pips. Here is Fibonacci retracements. This right here is Fibonacci expansion, which is overall a 3-step process. I'm sure you guys how to draw that later on. And many might see also that I don't really, my charts aren't too cluttered. Like the more I learn, the less I'm putting on my charts as it is. But I do also try to like identify my main levels of support, my main levels of resistance overall. And a few things that I did also on USJPY was always try to like just find out where is that strongest level of support is, where is that strongest level of resistance based off the highest time frame first. And when I say the highest time frame, I mean the monthly time frame, which is the highest one in our eyes. You could also analyze off any time frame, but keep in mind that not all time frames are going to be as smooth as the other one. The higher time frames that you do go, the more condensed or more compact these candles are getting. So when it's more compact, that's giving you more clarity on what market's trying to show you, right? So at the end of the day, like whenever you see a cluttered chart, like let's say if I'm on a 1 hour time frame, if it looks too noisy for you as far as too much going on, too many unnecessary wicks, that kind of stuff, go on one time frame higher. And when I say one time frame higher, I mean one time frame based off of the standard, the actual standard time frame structure, which is basically the 1 minute, the 5 minute, the 15 minute, 30 minute, the 1 hour, 4 hour, the daily, the weekly, the monthly. That's standard. So whenever I actually have too much noise on the 1 hour time frame, go on one time frame up, which is going to be the 4 hour time frame, which is that one time frame higher than based off the standard structure of time frames. If the 4 hour chart looks too noisy, one time frame higher. That's going to be what? The daily time frame. Bottom. You see a lot more structure as to what the market's trying to show you. Okay? If the person was looking at here, they would have probably, they could have found a median area within this entire zone as far as a median area where the market was finding a level of support. A lot of this also is based off of like my trading style. If you guys are my students, as far as Wall Street Academy, like straight focus on Wall Street Academy students, like you know this shit like down back by this time at least. For the outside classes, which is the overall group, which is Forever and Profit, some students and everything, they might focus on other training, but students that are focused on my course, they would have caught this move right here. A lot of them did catch like a good amount of this move, and a few of my friends also were actually trading with me that was based off of my trading style as well. So they knew exactly why I was getting in the market at a certain time, just based off of like what I'm actually looking at and like what I'm looking for based off of Confluence trading itself. Okay, so at the end of the day, like you gotta always realize that there's always gonna be certain areas that you could draw certain things. Okay, I'm not gonna always draw a support resistance on every single time frame if I don't have opportunity to draw it. I'm not gonna always have opportunity to draw a trend line. I'm not gonna always have opportunity to draw so many things. You know what I'm saying? But overall, you have to realize that you have to try to like you got to try to draw them in some kind of way just to see like if you have an opportunity to draw a certain thing that certain at that certain time within the market. So on the monthly time frame, a lot of people realize that like this right here was overall trend line that was descending based off of like the top areas within the market itself, right? It was right here. One area was right. My bad. So you have your point A and point B right here, which is based off your trend line. Once you have your point A and point B inside the market, then you can actually draw your trend line. If you don't have a point B a point A and point B, then you have no kind of opportunity to withdraw it. And point A and point B can also be on a downtrend. Point A and point B is based off of a high to a lower high. An uptrend is based off of a low to a higher low. So at the end of the day, it's kind of like it acts as a level of support on an uptrend, acts as a level of resistance on a downtrend. So it kind of helps you guide on where the market is actually trying to actually come back down to make a lower high or to make a higher low. It all kind of depends on the overall trend that you're actually in. So when it came down to this right here, this setup, once I seen actually breaking this trend line right here, it came from a sell zone, which was when the market was actually under a trend line, it's a sell zone. So that's when you're actually looking for the market to actually bounce off of the trend line, creating lower highs the entire time. On the opposite end, you're looking at a buy zone. Okay. So the major thing that I did on this was also always try to confirm your major level of support resistance. I already found my level of support based off of the monthly time frame. Probably alter a little bit right here. And it's based right here only because there's two areas within this intersection level that acts as a level of support and a level of resistance overall. So if I look right here, this spike, it bounced off when it actually hit that level, which means that that is considered as a level of resistance. On the opposite end, it's look like it bounced off, which is considered as a level of support. Same concept when it actually happened right here also between these two. I'm gonna color for you guys. A level of resistance and a level of support. So overall, that is probably like my main area for this entire setup right here, for a level of support and a level of resistance. And when it comes to drawing key levels, I always try to make sure that they're less than 10,000 pips, which this right here is still valid because it's still under 10,000 points, which is 1,000 pips. So once it's under 1,000 pips, which is 10,000 points, which means that you'll see 100 as far as like a five-figure number right here. Once it hit 5 figures, then it's invalid because it has to be right under 10,000